San Diego home sellers took some time off last month and buyers didn't get the memo. New listings come down, pending sales remain pretty steady, and median price barely moves.
Let's check out what's happened over the past few weeks, and then we'll zoom out to look at long-term trends. All right, here's a chart that shows the latest information about what happened between June and July of 2025.
Yes, so let's take a look at these month-over-month numbers. We'll run them down for you really quickly here. New listings down 13.8%. Home inventory continues its weeks-long decline. Pending sales remain about the same as they have over the past many months, down 2.3%. However, just not a great deal of movement in these numbers. Closed sales down 1.7%. Days on market definitely up a little bit from 38 to 40 days, so this number's been creeping up all year long. Median price now down 0.2% from July to August. Not a really significant move, although that number has been pretty stagnant for the last 3 months. Homes for sale overall down 6.2%.
What's the vibe out on the street right now as you're working with buyers and sellers?
Well, the vibe on the street is sellers want more and buyers generally want to pay less, although buyers are excited about recent interest rate declines, and then sellers are hanging on to that.
Well, don't spoil that too much because we're going to talk about rates in a minute.
Okay, yes. Sellers are kind of hanging on and trying to hang their hat on the fact that inventory is coming down, although, as always, if your home is not priced to sell, it's probably not going to.
Like you always say, price it well if you want to sell.
That is what I always say.
Okay, well, let's check out some long-term trends and let's get started with new listings.
Okay.
All right, here are the latest San Diego Association of Realtors charts for new listing information.
Yeah, so looking at the last 3 years here, we've got the month of August, we've got detached homes, attached homes, and then the year-to-date figures for both of those. And so August of 23 and August of 25 are looking pretty similar, although more new listings this August. Last August was much more robust in terms of new listings. And then for attached properties, condos, definitely a little less this year than last year, but about the same. And then year to date, definitely more listings, and that is reflected in the inventory, the number of total homes for sale on the market. We've had more listings year to date, both attached and detached. I think attached is a little softer than detached right now. Definitely more new condos on the market this year than last.
All right, well, let's talk about this long chart a little bit.
Yeah, so like we always do, we look back as far as this historical chart will go back to 2012. And new listings were up here closer to over 3,500 a month up until 2019, and then 2020, and we started to see this trend of less movement, less sellers on the market, and that, of course, has been driving prices really since 2020. Although we do have a real significant drop between 22 and 23. Which was the lowest activity, lowest volume year that San Diego County saw in over 30 years. And now things do seem to be up in 24 and up a bit more in 25 in terms of new listings hitting the market.
Okay, well, let's check out closed sales.
Yes. So looking at closed sales, 23 and 24 were almost identical, and 25 isn't much different, really. 5.2% down in detached, and like I said, attached properties definitely feeling a little softer right now, 18.3% down. There's a lot of reasons for that with condos. I mean, these are starter homes, move-up properties, more people trying to move in and out, and also huge challenges right now with insurance.
Yeah.
And this is hitting condos really hard, and homes too, but when a condo association...
Single-family homes.
Yeah, single-family
They're all homes.
Right, well, yes. That is true. They're all homes. So anyway, year-to-date numbers for closed sales are just really similar for the last 3 years. So not a whole lot of change to talk about there. And then historically, same story. We have, peaked peaked generally in the late spring, early summer here, as you can see in 20. Here's the spring of 2012, 2013 was 20. Yeah,
It's kind of a wonky one.
yeah, and then these subsequent years are all very similar, and then we see everything kind of falling off the cliff after 2021 in terms of closed sales, and we're kind of struggling to get back to this normal. I don't know when or if that happens. Definitely seems like we're establishing more of a new normal here.
I was hoping you weren't going to say new normal.
Oh, sorry.
For some reason, I don't really like that term, but that's okay. You could say it. Just the one time, though. Don't say it again. Okay. Let's talk about median prices.
Okay, median price.
You can have the mouse back.
Thank you.
You're welcome.
Now, I mean, this is an interesting one. Median price, year over year, it's up. Year to date, year to date, it's also up. But again, look at, detached housing, it's up year over year and month over month. And then here again, year to date, it's up. And then when you look at condos, flat.
Wow, that's pretty flat. Yeah, wow. Okay.
So again, condos definitely struggling. And when you get into a strange market or a different market, the market starts to shift. I've always said this, 21 plus years in this business. When the market changes, it hits condos first. Again, same reasons I mentioned before, starter homes, move-up homes. There's just more people trying to move in and out of condos, and the demand remains roughly the same.
Could be time to buy a condo.
Yeah, it could be. And then, of course, this chart here is interesting. We've been seeing prices going up in San Diego County very steadily from 2012 up until really here in 2022. I mean, we've had some plateaus, but 2022 was really the first time we saw any kind of real decline in prices. This was about a 15% slide here. And we're definitely above that now, although it definitely has been riding up and down. We've been on an up and down ride with median price. And it is interesting when I do the zip code updates that we do each week. Different zip codes are performing differently. This is, an amalgamation of all the zip codes, the entire county. So these are the averages here, but it is really interesting to see this zip code by zip code. There are many zip codes out there where median price now is exactly the same as it was in 2022, and it's been way up and way down in between. So
what's an area where there are some good bargains right now?
Good bargains. I mean, you're going to find some great bargains, in my opinion, in the East San Diego, 92114, 92113, 92102, these kind of central east of downtown zip codes that have seen wild appreciation over the past few years are definitely feeling the pinch. More homes on the market. La Mesa right now is a good place to negotiate yourself a good deal. So generally, East County and East San Diego is kind of my favorite bargain hunting spot at the moment.
Maybe buy a condo out there.
Maybe so.
All right.
Call the lender.
Okay. I think it's time to talk about interest rates now.
Let's do it.
I know you wanted to talk about it before, but
yeah,
now it's time.
Let's do it.
Okay. All right. Here's the most recent information from Freddie Mac for the weekly mortgage market survey.
Yes. So here is where the bright spot in the real estate market currently is. 6.35% over the past 7 days is the average. And the decline is, I'm not going to say this is a sharp decline, but it's one of the sharpest declines we've seen in recent months. And this is definitely a 12-month low here for mortgage interest rates. And I hear a lot of people talking all the time about what's the Fed going to do next time they meet. Are they going to lower it? Are they going to keep it the same? And I try to educate people every time I talk to them about this and tell them that it doesn't really necessarily matter nearly as much what the Fed does with the federal funds rate. It is that 10-year Treasury yield that we watch every single day to see
That's the first thing I check in the morning. Where are the 10-year treasuries?
to see what's happening. And this morning, for a minute, it dipped below 4%, which is generally there's about a 2-point spread between the 10-year treasury yield and mortgage interest rates. And when it dipped below 4 for a minute, I got very excited. It came back up over 4, but it's sitting in the very low 4s right now, which has mortgage interest rates in the low 6s, which makes a difference. It really does. When you're talking about the difference between 7% or 7.15 and 6.35, it's a pretty significant swing on your monthly payment when you're talking about median priced homes being just over $1 million. So this is really good news for buyers, and it's good news for a lot of those sellers that have that price that's just a tad too high. The market may come and catch you and pull you into that pending basket. So your lack of listening to your realtor may actually pay off. But it's exciting news, and you know the Treasury yield, as we've seen over the past week, it's dipped a couple of times on these surprise reports that pop out. What was it the other day that the numbers?
It was the PPI report, I think.
Yeah,
produced the wholesale prices.
Yeah,
something with
wholesale prices. All of a sudden, the report reflected something that was unexpected in a direction that pushed the Treasury yield lower. And I think the week before that, or the few days before that, it was a bad jobs report.
Yeah.
And of course, as we've talked about many, many times, up until the summer of 2022, for many years before that, the Fed was buying these treasuries by the billions, and that was artificially lowering the yield. And now what we're seeing is the economy, I guess by surprise or by osmosis or something, is somehow cooperating a tiny bit to help push this down. Is that a sustainable thing? You know, it's anybody's guess, but heading into this weekend, I'm excited because rates are down, and I think we're going to see some buying happening.
Sounds good. Osmosis, that's the diffusion of water across the differentially permeable membrane.
I know, that's probably the
I'm
wrong.
sorry, I remember the definition of that from biology class like 30 years ago.
Yes, and mortgage rates
has nothing to do with
Treasury
mortgage
yields
rate.
have nothing to do with differentially permeable
membranes. That was a total non sequitur.
Well, it was the wrong word to use.
That's okay.
That was your way of pointing that out to me, and I appreciate that.
Well, I'm sure next time you'll use a more appropriate word.
Keeping me honest.
Okay.
So yeah, that's what's happening.
All right, everybody. Thanks for joining us. Hope you have a great week, and we'll see you next time.
See you later.